of course, these days it's difficult to talk about opportunities. But we do think if we look at the drawdown, pre-market, it's already more than 20% for the S&P 500. And if you look at it historically, like a median correction with a recession following would be 24%. So we are almost there. And the average would be 30%. So if the Trump administration doesn't blink, right, we see certainly more losses ahead, potentially reaching this minus 30%. But it's indicating to you that probably we are already in a territory which is properly pricing some form of recession. So that's why we try to, at the same time, while we risk manage our portfolios, to not forget about the investment opportunities.
And when you think about those investment opportunities, is it a case of going back to the playbook that was working before the Trump tariffs, the European versus U.S. Equities within Europe, playing the defense sector, playing industrials on the fiscal spend that's expected? Or has the playbook shifted? Where are the opportunities once we do see what you are calling the worst case actually play out in markets?
I mean, it's probably if you look at the markets today and the last 2 days of last week, you see that investors are scrambling for cash, right? So you sell your profitable positions, and that's probably the reason why these banks and industrial names in Europe are down so much. But just fundamentally speaking, I mean, the European response that had been anticipated already will probably now be even stronger, right? So we will have more infrastructure spending, we will have defense spending, and now potentially on top of it, provided that if the Trump administration is not trying to find a compromise, we will probably also have some emergency measures, right? Be it on the fiscal side, so certainly protecting some companies and maybe then at some point also households. So that might be fiscal on top of it, right? And very short term. And I guess I hope we're not getting there, but at some point also the central banks need to step in and provide extra liquidity. And then that's exactly the point when probably all these trades will be very, very profitable again.
Well, let's talk about the potential market reaction if we do get some of these things coming through, in particular fiscal support from the U.S. Speaking to investors, it feels like one of the things that could put a floor under selling near term is if we do hear more on the tax cut front from the administration in the U.S., if we get more detail on a package of tax support for the U.S. economy. Does that actually put a floor under the selling, though, in your view?
I mean, it's something you need, right? You need sort of a circuit breaker, I guess. And then we still need probably a few days, if not weeks, to clean positions entirely. I mean, the latest 1 or 2 days of trading activity are clearly technical. You get, hedge funds sort of cleaning up. You have still, the short sellers you mentioned earlier. So there will be a lot of technical market action in between, but I think we need this circuit breaker. I mean, another one would be to also postpone some of these tariffs, right? So we're facing April 9 as the date, which is very important, and then the Chinese response on the 10th, all in this week. So it could come from any of these parts, so fiscal, monetary, or even from tariffs.